News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moskow.
Karen, markets look set for a turnaround as President Trump continues to send mixed messages on trade. In Oval Office remarks heard on Bloomberg, the president threatened a 50% tariff on China if it doesn't pull back on a 34% U.S. tariff. At the same time, Trump says he is willing to negotiate.
We'll be talking to China. We'll be talking to a lot of different countries. And I think, if we can make a really fair deal and a good deal for the United States, not a good deal for others. This is America first. It's now America first.
President Trump is not saying what a fair deal would look like, and he didn't answer when asked if he'd consider lowering rates below the minimum 10%. China is vowing to fight to the end if the U.S. insists on imposing higher duties that are set to kick in tomorrow.
Well, Nathan, some Wall Street titans are expressing opposition to Trump's tariff policy. And Bloomberg's John Tucker joins us with the very latest. John, good morning.
Good morning, Karen. Billionaire Ken Griffin, a Republican mega donor, said President Donald Trump's latest tariffs amount to a hefty tax on families and are a huge policy mistake by the administration. Larry Fink, head of the world's largest asset manager at BlackRock, told a gathering of chief executives and investors in New York, as heard here on Bloomberg Radio, the U.S. economy is weakening as we speak, warning that the market turmoil triggered by the tariffs is rippling across corporate America and the world.
I am troubled by that we are not the stabilizer as a country. We are destabilizing. And I think this is what the financial markets are trying to grapple with.
The highest profile break with Trump over tariffs may be Elon Musk. The Washington Post reports Musk has made personal appeals to the president to end the tariffs, going over the heads of other administration officials. Over the weekend, Musk took aim at the administration official who's been key to developing the tariff plans, the White House trade advisor Peter Navarro, and questioned his credentials. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. And speaking of Elon Musk, his wealth has taken a pounding over the last few months, while a fellow billionaire has been weathering the storm. Let's get more on that now with Bloomberg's Lisa Mateo. Good morning, Lisa.
Yeah, good morning, Nathan. It is quite a hit for Musk. His fortune fell to almost $298 billion on Monday when he lost nearly $4.5 billion after Tesla stock extended its losses. Now, it's the first time his net worth has dropped below $300 billion since November, as his role as an advisor for President Trump has really made Tesla his target for protest vandalism. But Musk is still the world's richest person, despite losing nearly $135 billion so far this year. Now, on the flip side, you have Berkshire Hathaway's Warren Buffett. He's among the rare few winners after President's tariffs triggered this sell-off. Now, his net worth has climbed $11.5 billion this year to nearly $154 billion. That's according to the Bloomberg Billionaires Index. Now, that's despite a $14.5 billion decline since April 2nd, when his net worth reached its highest level in 5 years. Now, experts say it really shows how the property and casualty sector remain pretty much protected from global trade. Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you. As for the markets this morning, futures are moving higher. This follows Manic Monday on Wall Street. Stocks started with another sell-off, with the NASDAQ 100 dropping 4.5% at the open. Then it surged 9.4% on a story the White House swiftly denied that the administration was seriously considering a delay to tariffs to allow for negotiations. Then it fell 6.2%. That was all in the first hour of trading. The index ended the day up a mere 0.2%. Keith Lerner is co-chief investment officer at Truist.
You're going to see these swings back and forth. Each headline is going to be over-extrapolated, and there's going to be a lot of emotion. So I think using a prudent dollar-cost average approach into the market, it makes a lot of sense right here.
Keith Lerner at Truist. At one point yesterday, the S&P added over $2.5 trillion in value during a 7-minute period.
Well, Karen, Democratic Senator Elizabeth Warren is lashing out at President Trump's tariffs, saying they risk throwing millions of Americans out of work. The Massachusetts Democrat says she fears a recession because of the tariff policy.
Look, I am really worried about whether we are already in a recession or just right on the edge. All of the lights are flashing red. And Larry Fink points this out, but he is not the only one. There are a lot of folks who are starting to say this, and a lot of evidence in that direction.
Democratic Senator Elizabeth Warren made those comments on Bloomberg's Balance of Power. You can hear the full interview on the Bloomberg Talks podcast or watch it on the Bloomberg Podcasts page on YouTube.
Well, Nathan, Chicago Fed President Austin Goolsbee says there's a lot of anxiety among business leaders about tariffs sparking supply disruptions and inflationary pressures. Goolsbee spoke with CNN.
The anxiety is if these tariffs are as big as what are threatened on the U.S. side, and if there's massive retaliation, and then if there's counter retaliation again, it might send us back to the kind of conditions that we saw in 21 and 22 when inflation's raging out of control, that it could send us back to the supply disruptions of the form that we saw in 2020, beginning of COVID.
Chicago Fed President Austin Goolsbee and his fellow central bankers have kept interest rates unchanged this year, waiting to see how tariffs and government policies impact the economy. And that's news when you want it with Bloomberg News Now. I'm Karen Moskow.
I'm Nathan Hager, and this is Bloomberg.